Sapura Energy has issued a termination notice to Yunneng Wind Power Co. in respect of a contract for the transportation and installation of monopiles at the Yunlin offshore wind farm in Taiwan. The contract had been awarded in March 2019 and had been significant as it had been the group's first offshore wind farm contract. In a statement, Sapura Energy said that it has an immediate right to legally and contractually terminate the contract. In a statement, Group CEO Datuk Muhammad Anwar Taib said that negotiations with Yunneng to remedy the breach began in November last year and that the group has since exhausted all avenues for an amicable solution. As such, a decision was made to terminate the contract as it was in the best interest of the group. The project was initially expected to be completed in September 2020, but completion was delayed to September 2023 following unresolved technical and operational issues not attributable to Sapura Energy. According to the board's filing, one of the rationale listed for the termination was that Yunneng had provided inaccurate and misleading soil data, which Sapura Energy says is a serious breach of its obligations under the contract to provide accurate soil data for the Malaysian party to rely on. As such, Sapura Energy says that this wrong data critically affected its performance in the execution of its work, compromised the safety of its work, as well as caused a substantial increase in costs, which Yunneng failed to compensate Sapura Energy for. According to the filing, the termination will not have any material effect on the gearing, earnings per share and net assets of Sapura Energy for FY22. However, it should be pointed out that when Sapura Energy registered a deep net loss of 1.5 billion in the second quarter of FY22, it was partly due to provision for foreseeable losses and higher project costs for that Taiwan wind farm, along with another project in India. Sapura Energy says works for the wind project are currently at 36.85% completion as at the date of termination. Following the termination notice, Sapura Energy will pursue its claims via the dispute resolution process prescribed under the contract, namely arbitration under the German Institute of Arbitration in Bremen, Germany. Bank Negara reiterated its stance that the economy will expand between 5.5% and 6.5% this year, underpinned by continued expansion in global demand and higher private sector expenditure, according to Governor Tan Sri Noor Shamsia Muhammad Yunus. According to Noor Shamsia, the central bank will announce its 2022 growth forecast in March. In an email interview with Bernama, Noor Shamsia notes that Malaysia is well positioned to gain as global growth and trade bounce back, as observed in 2021. She points out that strong external demand for electrical and electronics products and commodities, particularly from key trade partners, will contribute to further expansion of the export-oriented sectors. She says that a broad-based improvement in overall income, employment conditions and consumer sentiments would provide a lift to household spending. Nevertheless, risks to the outlook for 2022 remain, arising from a weaker than expected global growth, worsening supply chain disruptions, and the emergence of severe and vaccine-resistant COVID-19 variants of concern. Meanwhile, Noor Shamsia says headline inflation is likely to remain moderate in 2022 as the base effect from fuel inflation dissipates, while core inflation is expected to be modest, with upward pressure contained by continued slack in the economy and labour market. On another note, Noor Shamsia says Malaysian banks are taking efforts to integrate ESG considerations into their governance, business strategy, operations and risk management. She explains that the recent floods were a powerful demonstration and a reminder of the need to take the sustainability agenda seriously, and that while baby steps have been taken, more work still needs to be done. KPower clarified that its substantial shareholder, Grand Deal Vision, had disposed of its share via a direct business transaction in amendments to the board's filings it made on February 3rd. The group said that the reason for the circumstance of change should be disposal via DBT instead of for sale, which was previously stated in the announcement. On Thursday, it said Grand Deal Vision had disposed of 500,000 shares or a 0.092% stake in KPower for 35 cents per share on January 31st, with with the transaction also reducing the deemed interests of KPower Executive Chairman and Group MD Mustaqim Matnun and non-independent non-executive director Sarah Azrin Abdul Samad. Separately, the group reported that KPower CFO Amirul Afif Abdul Aziz disposed of 650,000 shares or a 0.12% stake in the group on January 31st. According to Bloomberg data, Kenanga Investors is KPower's biggest investor with a 16.3% stake, followed by Grand Deal Vision and Mustaqim. KPower's share price has been trending downward since May 2021 amid audit issues at sister company Bursa Dynamic Holdings. Bursa Dynamic MD and CEO Dr. Muhammad Abdul Karim Abdullah was previously the non-independent and non-executive chairman of KPower prior to his resignation last December. Abdul Karim also ceased to be a substantial shareholder in KPower on January 13th after disposing of 79.05 million shares in a series of transactions between February 2021 and January 2022. Over the past year, KPower's share price has dropped 85%. It closed today 2.8% down at 35 cents. While the historic share price drop of Facebook's parent company Meta Platforms on February 3rd triggered widespread selling on Wall Street, the spillover effect of the massive sell-down was relatively muted on Bursa Malaysia's technology index. Bursa's tech index, which fell as much as 0.5% during the bourse's afternoon break today, saw the loss halve to 0.26% for the index to settle at 81.49 on market close. Benchmark FBM KLCI, meanwhile, slipped 0.19% or 2.97 points to close at 1,522.76. On Thursday, stateside, Meta dived 26.4% to settle at $237.76, its biggest one-day drop ever since its Wall Street debut in 2012, wiping out $252 billion from its market value in just one day. It was the biggest single-day wipeout seen for any US company and dragged the Nasdaq Composite down 3.74%, its worst day since September 2020. This came after Meta reported a rare profit decline due to a sharp rise in expenses, shaky ad revenue growth, competition from TikTok, and fewer daily US users on its flagship platform. Prior to Meta's sell-down, Bursa's tech-related stocks had been selling targets as investors rejigged their portfolios to price in the likelihood of more interest rate hikes. MIDF Research, which has kept its positive rating on the local tech sector, said in a note on Thursday that the recent sell-down was an overreaction to fear of higher interest rate environment and not due to expectations of lower global semiconductor sales after 2 years of robust demand. MIDF says that the fortunes of the Malaysian tech sector are highly correlated to the global demand for semicon and that it expects demand to stay solid in the next couple of years given the increased proliferation of tech in daily lives. Trading in the securities of Toyo Venture Holdings will not be suspended on February 10th as the company managed to submit its annual report for FY21 to Bursa Malaysia on January 31st. This week, the company said it withdrew its proposed dividend of 1 cent per share due to insufficient retained earnings. Separately, Toyo announced that its external auditor, KC Chia and Noor, has issued a qualified opinion on the group's audited financial statements for FY21. The auditor is unable to obtain sufficient appropriate audit evidence to determine the continuity and successful outcome and reliable measurement of the expenditures attributable to the power plant development project undertaken by Toyo's subsidiary Toyo Inc. Group during the development phase. Toyo, which changed its financial year from June 30th to September 30th, posted a net loss of 12.9 million on a revenue of 99.88 million for the 15 months ended September 30th, 2021.